Welcome traders, this is Dr. Barry Burns with TopDogTrading.com. Okay, this video is actually meant to be a companion video to my podcast, which is Trend Trading Made Simple. So if you are watching this video any place other than on my website, you're certainly welcome to view it, but I just wanted to let you know that the full discussion of this video and of the topic of the video is in an audio podcast, and that's on my blog. Just go to www.topdogtrading.com and click on the podcast link, which is a label at the very top of the page, and there you can listen to the audio. I recommend you listen to that first and then watch this video. It's there for you, everything's free, so it's there for you as a gift. Okay, what we're going to do today, however, is to illustrate some of the concepts talked about in that audio podcast. So let's get right to that. So one of the things we talk about with the trend is we say, or traditionally at least it's said, that a trend is established by higher highs and higher lows. This is traditional technical analysis and how they define an uptrend. And it's because the market doesn't move in a straight line up or a straight line down. It tends to wiggle. And so it tends to kind of move up a little bit and then down a little bit, up a little more, down, up, down. Same thing in downtrends. Moves down, retraces up a little bit, down, retraces up a little bit, down. This is the general move of the market when it's moving in a direction. But the overall direction here is still up. Overall direction here is still down. These little retraces are actually great places to enter the market in the direction of the primary trend. So looking at actual price bars now, you can kind of see that. Market moves up, here just slightly down, up, slightly down, up, slightly down, up, down, up, down. Now it puts in a lower low. Okay, here was our last low, and now we got a lower low. So now the question is, are we headed into a downtrend? That is the question. Well, let's see, and we can answer that question. So there we go. Now we have officially put in a market that has provided us with a, here's your high, there's another high. Okay, you had a low over here, here's another low. So we officially have now a lower low and a lower high. So this would be considered by many to be a downtrend. Okay, is it really though? Remember, when we're talking about a trend, we're looking for a direction that's going to follow through, not just a short-lived direction, but we want to get a good reward out of the market, so we want it to be a long-term direction. Well, in this case, what happens? The market moves right back on up. It breaks this high. See, we put in lower low, lower high. Here's one high, here's another. Here's one low, here's another. But now, we've gotten above this high and put in a higher high again. And the market's kind of going a little higher, and then it breaks that low again. So what is the trend? Is it up? Is it down? You could say, well, it's down, and then it goes up, and then it goes down. Well, that's a messy market, and there's no good risk-reward there because there's not enough reward in either direction. It's not establishing a long-term direction, in other words, and therefore it's not going to give us a large enough profit. So what we want to do is we want to use an indicator that will help us avoid these choppy situations and get us into some nice long-term trades. And we want something to kind of smooth out this erratic movement in the market. So let's take a look at that right now as we pull up the 50 simple moving average. Okay, now I've pulled up that 50-period simple moving average. This, by the way, is a daily chart of the S&P 500. Just because it's a standard market, I thought I would show this. Now, what you'll see is when the market made a lower high, lower low, and then made higher high, higher low, and then went back to lower lows, what happened to the 50-period moving average, which is this black line here? Well, it just went flat, didn't it? This whole time, it's just going sideways. And that is a great clue. It's telling you that there is no long-term trend. So therefore, even though you get these little uptrends, little downtrends, that's not very good for trading. And what we want is to catch the big moves in the market. And the 50 MA here is saying we're in a choppy situation, and you can get your trading account chopped up, get killed with commissions. You're going to get stopped out going down. You're going to get stopped out going back up. So when the 50 MA goes flat, it's often good to just stay out. Keep your powder dry and wait until we get a real trend started. Okay, so here we are going to look at, this is where I really watch for a change in market direction. When the price bars are below the 50 MA and then they come above, now I'm looking for longs. If the prices are below the 50 MA, generally I'm looking for shorts. So it comes above the 50 MA. Now here's another interesting thing to look at. Again, the market is putting in roughly equal highs and equal lows here. And then it even puts in a little bit of a lower low. But this whole time, the 50-period moving average is angling up. And sure enough, after the market consolidates for a little bit, it does indeed continue moving up. It fakes you out to the downside. Here's where a lot of people get faked out. They get hurt. They think, oh no, my longs are in jeopardy, so we put in a lower low. But the 50-period moving average is saying no, the correct side to be on is the long side. So let's continue to follow it. Notice too how the 50 MA provides support in the market. So it'll come down to that level and then it'll bounce off. So again, we get some sideways movement, but the overall general direction is up. And it's very, very important to know which side of the market you would rather be on, up or down. Now we break down below the 50 MA. 50 MA starts angling down. And again, we find that the downside is where the market is really starting to go. And so if you want to choose a direction, you want to be short. Now, it's very important to understand that this is absolutely not the only thing you need for trading. When you have a trend, that is just purely direction, up, down, long, short. But we also need to know how strong that trend is. In other words, weak trends we're going to ignore. The 50 MA is not the solution to every trading problem you ever had. It just gives you general direction. But you want to know if that trend is strong or weak. And if it's a weak trend, we're not actually going to consider it. And then also you want to know the exact timing as to when to get into these trending situations. So we use other energies. We use momentum and we use cycles to determine the strength of the trend and exactly the best time to enter the trend. Those are beyond the scope of this video, but I have other things that will cover that. In fact, I'll mention it right now. I do offer a 5-day free video mini course, and in that free video mini course I do cover these other energies. In fact, I cover 5 energies that we look for in the market. Trend is just one of them, and you can sign up for that on my blog in the right hand column. There's a little sign up form there, and you get these videos every day. Get one video for 5 days. It actually has little quizzes on there, and it's very professionally done. No obligation. It's just my gift to you. So that's it for this video. Hope you enjoyed it. If you did, please feel free to reply in the comments section, post it to bookmarks, give us some feedback. We'd love to hear from you.